All right, what's up, everyone? This is gonna be the first trade recap I am gonna be doing, and I'm gonna start doing these trade recaps instead of just me posting a picture of my executions and then writing a paragraph. Because in a video, I'll be able to explain to you guys more in detail on why I took the trade I took for the day, and I'll be able to go into what emotions I felt. And basically just explain my strategy to you guys right after I took the trade. All right, to get started, what was I looking at beginning of the day? So I hopped on the charts at 7:38 in the morning this morning, and I've had this fair value gap marked out for a couple days now. Oh, by the way, if you guys don't understand some of the concepts I'm talking about, everything I'm going to be talking about is going to be covered in the Futures Crash Course in all the videos I'm going to be making. So if you don't understand for now, that's fine. You can just watch those videos, and then when you understand, you can come back to this, and you'll be able to watch it knowing the concepts. Anyways, I came in this morning, and I was bullish. My bias was bullish pre news. So at 8:30, you can clearly see this really big move up, right? All the way to this fair value gap. Now, what caused this move up? Well, there was news at 8:30. So what news is, it's basically you go to Forex Factory, and then here it's going to tell you a bunch of financial news. All you need to worry about is news regarding the US dollar. So, for example, today, 13, we had CPI, which is red folder news. Now, there's two types of news. Well, there's multiple types of news, but the only one you should be focusing on is um, orange folder, red folder. So today we had CPI, which is a pretty big news event that can lead to big spikes in the market. So you want to avoid trading before these news events because your strategy is going to get invalidated no matter what when these news play out. So before these news, I was bullish because I knew that we wanted to retrace back to this fair value gap, and overnight um, we had swept some liquidity. We swept New York and Asia, so my bias was bullish. Now, after news, when I saw this really big move up and saw that it swept London highs, right? Now, what London highs and I'm going to be going over this in the crash course, but London and Asia sessions are basically like normal New York session, but um, this one is from 2 in the morning to 5 in the morning, and then Asia is from 9, I believe, and that's from 8 to 12. Those are basically other sessions where trades are being placed, like there's liquidity. Um, but I normally only stick to trading New York because I mean these are late at night and it's not really optimal to trade these. But they are good to use as indication points for highs and lows. So as you can see, the news, right? This is a news candle. The news took out London high, equal highs, and it also took out um, previous New York session. So after this huge move, and it also took out these relative equal highs that we had from all the way back here. After these news, after all of this happened, I was bearish. Why did I change my bias? Well, I changed my bias because I saw that we swept all of this, right? And sweeping liquidity to the upside means we're going to be due for a move down. we swept all of this and touched this fair value gap that it's been respecting a lot for the past couple days. It respects it here, it respects it here. We've already had a lot of touches into this fair value gap. So me seeing this come to the fair value gap and bounce back down is a confluence, is a confirmation of the market being bearish. As along with that, whenever a news candle is formed, the news candle is basically the candle that gets formed when news comes out. Whenever that's formed, it creates prominent lows and highs because normally when it comes out, it just spikes up and down and then moves in a direction. So here, as you can see, it created this low, right? News low, and it created this high. Now, normally, I use news candle as part of my strategy. Why? Because these 2 points are very high confluence points that the market will want to go back to. So, for example, in this trade, the reason why this trade was so good is because the news candle that's formed, it takes out the liquidity to the upside. It takes out the high of the news candle. So now what am I looking for? Now I'm looking for a move down to the low of the candle, right? Of the news candle. And that's also why my bias was bearish, because now my target for the day is this low of the news candle. All right, after I see this touch on the fair value gap, that is when I start looking for my entry. Now, what is my entry? My entry is inverse fair value gaps. What an inverse fair value gap is when 3 candles form. 3 candles form. It takes 3 candles to make a fair value gap, right? And all an inverse fair value gap is basically candles on the way down disrespecting and breaking the fair value gap. Because why? Well, fair value gaps are meant to be points where market goes back down into to fill more orders to then keep going back up. Now, what does it mean when it does the opposite, when it completely ignores that and closes below that fair value gap? That's an inverse fair value gap, and that's what I use. That's my confirmation of whether I know to place a long or a short. Now, in this scenario, it worked out perfectly because it took out London and New York session highs. It also tapped into this fair value gap that's been respected, and it took out the news data high. So everything here was telling me it was going to go down. Now I just waited for my entry. And as you can see, I got a really clean entry right here. So let me use this tool. All right. So right here, it's 842, right? And as of now, I don't know if the market's going to go down. My bias is that it's going to go down, but obviously I'm not certain of that. I need to wait for my strategy to play out. So all I'm doing here is waiting. I see this fair value gap gets formed. So now at this point, all I was doing was waiting for candles down to close below this fair value gap. And eventually, waiting, boom, I get it, right? So as soon as this 2-minute candle closed below this fair value gap, I entered into shorts with a stop loss above the high, right? Now, where was my take profit or my target in this move? Well, as I was saying before, my take profit was the data lows. The reason I was targeting this low is because I know that market will want to retrace back to this and take out this low because data lows and data highs have so much probability of getting swept. And this is why I set my take profit here. I set it right at this low. So I entered here, set it here, and my break-even point was once it hit this intermediate low right here. So my trade this morning looks something like this, something like that, right? So I enter here, still don't know what's gonna happen, but I'm just waiting. Okay, it's going down, good momentum, waiting, boom, hits my break-even point. So what do I do at this point? I grab my stop loss, right? And I put it to where I entered. What does this do? Basically, if this reverses back to my entry point, I lose nothing. So as of now, this trade is risk-free. So I'm guaranteed not to lose any money. Obviously, I still don't know if it's going to hit my take profit or not. But now I know for certain at this point, I'm not losing any more money in this trade. Now, why would I want to place my break even here after it passes it? Well, because since this is a low, right? If market is bullish and my bias is wrong, then it should go up after sweeping this low. That was my thinking when I decided to put my break even point there. So if you keep watching, it's going, and then here it starts stalling and retracing a little bit. But it doesn't matter because at this point, as I said, I'm risk free in this trade. I just fucked it up. Give me a second. All right. Now I'm just watching, and there's nothing more I can do because once I execute my trade, I normally do something to distract myself so I don't intentionally, like emotionally, take profits too early or cut my position in half. So at this point, I know what my target is, and I'm just waiting for it to hit. If it doesn't hit, oh well, it's not that big of a deal. I'll find another setup. So all I'm doing here is I'm pretty sure I was just on my phone waiting for the trade to hit, waiting. It actually took a while. It started stalling, especially when market opened. But as you can see here, it eventually ends up hitting. Boom, right there. So the reason why this was such a good trade is because we had such obvious points of where the market wanted to draw to this morning. And as you can see, I don't know if you've noticed, but my risk to reward on this trade was 3.36. And normally my risk to rewards are between 1.5 to 2. So this was a very good trade in regards of how much I was risking to how much I was expected to make off this trade. All right, hopefully you guys enjoyed my first trade recap. I know that a lot of the concepts I talked about in this trade recap, I haven't gone over in my future Scratch course, but I will. So once I do that, once I explain to you guys, news candles, fair value gaps, and like all of that, which there is a lot more videos I need to upload and get finished. Um, you guys will just be able to go back to this and understand more. That's my goal with this, just to have a list of these trade recaps. So for you guys to study and see the actual trade, just come to these videos and take notes and watch them. But that's going to be it for this video. And tonight I am going to be dropping my print on strategy video. So I'm excited to record that and show it to you guys.